I've put together 3 different investing portfolios depending on what type of person you are, and I think just one of these could be all you need to be a successful long-term investor. Let me show you how I've put it together. So here's the criteria I was working with. Firstly, I wanted to keep things simple. If we're in this for the long run, we have to have an investing portfolio that's easy to manage and isn't going to evolve into some kind of Frankenstein monster. So the fewer investments, the better. Secondly, I wanted something that's super low cost because if you didn't know already, even small costs can add up over decades, and some investors are literally giving away tens of thousands of pounds without really knowing about it. More on that one later. Next, we definitely need to be well diversified, so I'm going to make sure that we invest all over the world and include many different types of companies. With investing, we have no idea what the future holds, and if you go all in on a few companies that end up going bust, you aren't going to have anything left in a few years' time. Anytime I think of this South Park scene pops up in my head.
Reinvest the earnings into foreign currency accounts with compounding interest and it's gone.
And then finally, all of these portfolios are going to be using ETFs, which means exchange traded funds. These are just big collections of stocks that have been put together, so when you buy one share of an ETF, you end up getting lots of small slices of lots of companies rather than just a single one. Also, the ETFs I'm going to be talking about are all passive index funds, so there's no overpaid money manager trying to beat the market. This also helps with keeping those costs down that we spoke about earlier as well. Now, I'm using ETFs rather than mutual funds here in this video because ETFs are available on way more platforms, but you can easily find mutual funds that make very similar portfolios. I'm not going to go into all the differences and little details in this video, so you might end up having to search through my back catalogue, but all of the information is out there somewhere. Okay, first up, here's the simplest portfolio you can make. I'm calling it the set and forget. And this is one for those people who just want the simplest and easiest portfolio. Something they can invest in every month and then never look at it again. And with that in mind, this leads me to pretty much having only one option here, and that is a single global index fund. So this means that you'll own shares in almost every major business in the world, whether it's Apple and Microsoft in the US or Shell and AstraZeneca here in the UK. This fund has over 3,600 companies inside of it, and it's called the FTSE All World ETF. And you can find it from the ticker symbol VWRP. Just quickly on this fund, there is another version called VWRL, and it's identical except for one small detail, and that VWRL pays a dividend, whereas VWRP automatically has everything reinvested. Personally, to keep things simple, I'd rather choose VWRP, but I'll let you do your own research as it's always going to be your decision as an investor. Also, it's worth saying quickly that VWRP is now available on the Vanguard platform directly, whereas it never used to be, and you could only actually buy it on other platforms. If you want more information on that, head over to the Vanguard website and you can see all of the details you need here. Like I said earlier, this is a simple global index fund, so that means that all of the companies inside of it are ordered depending on how big they are. As companies get bigger or smaller, this will change inside the fund, and even if a company goes bust, all of that will get taken care of for you. In terms of cost, you're looking at annual cost of 0.22%, which is baked into the fund automatically. As I've said on previous videos, this will mean that an investment of about £10,000 works out to be an annual cost of just £22, which that's about the same cost as getting Domino's delivered on a 2 for Tuesday offer. Now, if you do want to have a look at a fund like this and get yourself started investing, I keep all of the links to the platforms I use below, like Trading212 and InvestEngine. They both offer free stocks and shares ISAs and both have all of the ETFs I'm speaking about in today's video. One of the best things they offer is the ability to buy fractional shares. So no matter how much you can afford to invest each month, you'll still be able to buy the exact amount. Anyway, check them out below, and thank you to everyone who continues to support the channel. Okay, what about if you're a little bit more of an investing nerd like me and want a little more control over your investments? Or you're happy to spend just a little bit more time managing things in order to squeeze every penny out of your portfolio. Here's my ultimate portfolio for who I'm calling the frugal investor. Now, this portfolio is made up from just 2 funds and was also featured on this video last year, and honestly, I'm not sure there's much better you can do. I think we get a good balance here of cost and simplicity, whilst also giving you a little bit more control if you feel the need to tinker. So here's what's inside this portfolio, and let me explain why. We've got 2 funds, the Developed World Fund and the Emerging Markets Fund. Now, when you break the whole world down, you basically get 2 parts of the stock market. You get the developed markets, and then you also get the emerging markets. And thankfully, Vanguard have index funds for both parts. Now, the benefit of buying these funds, rather than just the first portfolio we covered, is that this one ends up being cheaper to own. The cost for the developed fund are just 0.12%, and the emerging markets fund is just 0.22%. Now, don't forget that to work out your total cost, you will have to figure out how much to invest in one fund and how much to invest in the other. If you want to just stick with the market and go by the sizes of the companies, then the split you'll end up with is very close to this. 90% of your portfolio would be in the developed world and 10% of your portfolio would be in the emerging markets. Now, if you did this, your total cost would then actually look like this. Say you had £10,000 invested, £9,000 would have the 0.12% fee, and then the 0.22% fee would only apply to the £1,000 that is left in the emerging markets. With some quick maths, here's on screen now what it looks like. Your overall cost would be 0.13%. And that's a pretty nice saving from the 0.22% if you just went with the global fund that we mentioned earlier. Does it make a massive difference in the long term? Well, let me just run a quick example to see if this is even worth it at all. Say you did invest for 20 years, putting away £200 a month and received an average return of 9% a year. You end up with £128,970. Let's now say that your fees were the difference between the first portfolio and this second portfolio. So 22 minus 13 would be 9 points difference. So now if I run the same example and do 8.91% rather than 9%, we should see how much difference these fees make over that long investing career. Now the number we get to is £127,617. So £1,200 difference over 20 years, which is 240 months worth. So that works out to be around £5 a month saved. Definitely not nothing, but then also some of you could argue that it's not worth it. So I'll leave that one up to you to figure out. Personally, I don't stress too much when the fees are this low anyway, but I would be worried if your platform or your fund is charging 0.5% or even 1% to manage your money, as that's when things really start to add up. Just to show you what this means in real life, let's say you did have an expensive platform fee or a pricey fund with a 1% fee. Using that example earlier, if we only get 8% a year rather than 9% a year over that 20 years, here's what we actually get left with. £114,787 is the number. And that means that you've given your broker a whopping £14,000 over 20 years. So please, whatever you do, keep your costs low with investing, as it's one of the only things that you can actually control. Also, one final thing to add on a portfolio like this, you would actually need to manage it. So each year, or as often as you like, you would have to make sure that the balance is set how you like. For example, you might want to put more money into the emerging markets and less in the developed. Or you might just want to follow the market and try to keep things balanced as you put money in each month. Again, this would be all up to you to do, but luckily some platforms let you easily balance with just a few clicks. And these are also the same ones I use, always linked below in the description. So in summary, this portfolio is still super simple, but it would require a little bit of time just to make sure things are balanced the way that you like. But in return for that time, you can save a bit of money over the long term. Really, this is all about personal choice and it's all up to you. I'm not a financial advisor, so do your own research, figure out what you like. Okay, moving on to the final portfolio for a person I'm going to call the Tinkerer. This one would be the most advanced one in terms of being a bit more complicated, and it would need some more time to manage. But then you do get a lot more control and even cheaper fees. Basically, with this portfolio, you're going to break the world down into each of its parts and then choose an index fund that matches it. And the end result could be something that looks like this. This one I've made would have around 6 different ETFs, and then once you add up all of the fees and those weightings, you end up with costs of 0.09%. So again, using that example of having £10,000 invested, this portfolio would cost just £9 a year to manage. Good luck getting anything in dominoes for that kind of money. Now, please do note that this is by no means perfect, and you can make this kind of portfolio using any kind of index funds. I've used Vanguard ones because they're super popular and easy to find, but they don't cover every single sector, so you have to kind of mix and match to make things work. And I think this is part of the appeal for a portfolio like this. Really, it's all down to you. How much do you want to lean towards a certain country or a certain region? You can dial in exactly what you want to do and see if you can beat the market slightly. For example, you might think that the US market is really overvalued at the moment and you don't want to put more than 60% of your investments there. So you might weight more toward market like Japan, Europe, or even here in the UK. Just worth saying here that you'll probably want to be careful what platform you use with a portfolio like this, as remember, each ETF would be like buying a share, and some old platforms might charge you per trade. So again, I know I've already mentioned this, but the platforms I use below will be able to help you manage this, as you don't want to end up costing yourself loads in trading fees just because you want a little bit more control. And just on that point on cost, remember that when you are investing, another major cost is going to be the platform itself. Make sure you fully understand the fees and charges and work out what's going to be the best for you. Many people have sent me cheap mutual funds or mentioned them in the comment section before, but what they fail to note is that these cheap funds are only available on expensive platforms. So just be really aware of that one. Take your time in figuring things out, and you could even go back to a video I did going over some of the best stocks and shares ISA platforms from 2023, which will get updated at some point before the end of the financial year. Anyway, I don't want to get too technical on these things. I really just want to inspire and give a bit of a place to start when thinking about what your investing portfolio might look like. I think it's always a term that scares people, but really it just means what you're invested in. And it can be as simple or as complicated as you like. I share all of my investments here on YouTube as well. Do feel free to go and watch those. And you'll probably see that I'm somewhere between the frugal investor and the tinkerer, and I'm fine with that for now. But really, simple is best, so find out what works for you, and most importantly, stick with it over the very long term. Please let me know in the comment section below what your portfolio looks like at the moment, and if you're going to be making any changes this year, or also feel free to help out others with questions that I can't always get around to answering. Anyway, on that note, I'll leave you with this next video. Happy investing.